Hey guys, it's Mark here at Teslary, and Tesla had a great day today, closing at $261.16. That was an increase in share price at $14.63, or almost 6% on the day. Now, yesterday we talked about this kind of constricted pricing, this almost like a ascending triangle, you could say, that was forming on a short time frame for Tesla. And usually these would break away. They would break kind of violently in either direction. We saw that happen a couple times in the past couple of weeks, and they would break to the upside sometimes, and they would go up, a handful of percent. So breaking up and going, 6% makes sense, but we weren't really expecting that. What we were expecting from yesterday's talk, that if it was to break to the upside, a 255 would make a lot of sense. So there's a couple of scenarios that we were thinking about. Number one, we would have to kind of break through what we were thinking would be a right shoulder pattern in what is a larger head and shoulders. So this is a larger time frame head and shoulders. This curve was what we drew to be based off this kind of angled neckline, the right shoulder of that pattern, and kind of basically almost expectedly, you could see that it was kind of struggling at this level, which we were saying breaking through that would kind of invalidate the head and shoulders to a certain extent. That was this area curving around 253 to 252. It breaks through that after a couple minutes, and it decisively gets through. And what does he do next? We were thinking that 255 would be the next level of resistance. Obviously, that was the case, and it bounced around, pressing up against 255. But these are just, if you were just kind of just looking at it in a smaller time frame, these are just bull flags. Like, this is a kind of bull flag pattern. It's pushing up against a certain price, trying to get people to sell everything. And when there's nothing left to sell, then it goes up, right? That's what happens. So it runs out of sellers. It runs out of sellers here at 255. That did not take long, honestly. I was really expecting 255 and 260 to provide some really considerable resistance, and you didn't really find that until we kind of got around to this level right here, which is around 257.50. It's always like those $2.50 increments or $5 increments. That's very important for price action for Tesla, and it proves it out here. Except when it got to 260, okay, so you can see, and we're on the minute still. This is a small time frame. That when it got to 260, it was a very brief interaction before it broke through, and it got and closed above 260. That's a really bullish move, because what are we in now? We're in the gap. We don't even need that much more to close that gap. Now, to be fair, if the gap is closed, and we'll draw a line, if this gap is closed really quick overnight or in the morning or at the open, it wouldn't make sense that there would be some resistance again there. But gapping above it is probably the best way to really, express bullishness. I think Tesla really performs better when it does an island reversal, meaning that it gaps down, a couple days of consolidation, it gaps up over the gap that it gapped down from, and you just have this kind of price action that's floating below most of the rest of the pricing. And that is kind of what we want to see continue to happen. It's just gap, gap, gap. Is that great for the future of Tesla price action? Maybe not, because a lot of people say 80, 70% of the time gaps get filled in a short period of time. But hopefully they don't. But we've seen it happen even when we are super bullish. When Adam Jonas over here kind of propped up our stock a good 10%, and we eventually fill that gap within like a week and a half. So it can happen, and Tesla is really violent in that way. But now the question should be asked, like, why is this happening? Like, you probably want to know why it's happening. Well, number one, if we were to overlay quickly just to establish the story, it's okay. So Rivian, the other EV maker that's of note in America, did really well today, and we'll talk about Rivian. We'll talk about Rivian later, because it didn't do so well after hours. So Rivian did okay, right? And that kind of makes sense, because why did Rivian do okay? It was something like 8-9% on the day. Tesla's something like 6% on the day. Why did the EV makers do good? Well, is it that finally the idea of a prolonged strike with the UAW is affecting the other manufacturers? Well, what's one way to determine that? Well, let's just compare it. We were looking at how Tesla was tracking Ford, Stellantis, GM up to this point right here. You can see it right here. This was on Thursday of last week, and we started to see there's a divergence finally. You're seeing a divergence play out where the pricing doesn't go in line with each other. You can come and say that, for a couple of days in the past couple of weeks, that, yeah, it was kind of, going in this downward angle. But a lot of people would say that's your typical what? That's your typical bull flag. And guess what happens after that? The rest of the names, they were forming a flagging pattern really, but they all broke down. And of course, I know Stellantis does a little bit, outperforms a little bit compared to the legacy auto names, but let's go zoom in on a tighter time frame. This is only a couple days now, but you're seeing here, is this the break Thursday of last week where the price action of Tesla diverges from the rest of the automakers? And does that contribute to the gains of Tesla? Does that contribute to the gains of Rivian? You have to kind of say it does, because what we're finding out is, through leaked messages, I talked about this in a lot of videos, how the UAW is kind of enacting this campaign of trying to ruin the car makers' reputations, trying to drag this out. And it's really the understanding from the rest of the world now is that this was a predetermined strike. This was a predetermined act. There was no desire to negotiate a contract before the end of the last contract. They wanted this to go to kind of a prolonged, dragged out fight. And for what reason? What reason alone? We talked about this in other videos again. I honestly think it's because this could be the last contract that's important for the UAW auto workers. Because if this contract lasts, let's say 3 or 4 years, right? In 3 or 4 years, do you think these auto manufacturers are competing well against Tesla or not competing well against Tesla? Do you think in 3 or 4 years, which would be 2027, 2028, are we producing somewhere in a range of like 4 million cars a year? How much are we taking from other auto manufacturers, eating into their ICE sales as well, going ahead and making their investments into EV worthless? Because these factories they're costing them billions of dollars per battery factory. When it comes to the EV actual vehicle factories, billions of dollars there. They have to start up this whole, and they're investing in these new platforms to try to save money, because they know that the traditional way of making cars is just not there, and they don't have the software that's flexible enough to allow them to do over-the-air updates, to do full self-driving and things like that. So we know there's a lot of hurdles you need to overcome, which means a lot of CapEx spend. Can you spend that CapEx if your auto workers are being paid 20, 30, 40% more over the course of that 3 or 4 year period? Maybe not. And you're seeing analysts come out like Adam Jonas is talking about these legacy auto manufacturers need to re-envision the way they're approaching cars, and they have to kind of go all in or go all out. You like this whole double dipping, and it's like I can do ICE and I can do EV very well, when the reality is you're going up against regulations that say in a couple of years you'll have to be paying fines if the number of cars in your fleet is not this percentage of EVs, right? So that's what we're kind of dealing with. That's what I think what we're seeing happen here is that outperformance is due to the other auto manufacturers not doing so great. But also at the same time, the rest of the market is doing okay. Here's the S&P 500. And what do we talk about S&P 500? We figured that what would happen? It would come down to 421, dip below it maybe, and then guess what? Kind of rally up. Now, we almost got this dead on. So I guess we're not too surprised. But what happens from here? We don't really know. What you want to see tomorrow, and I want you to track it yourselves, is have on your charts open on the 10-year yield, on the 30-year long bond. What you want to see over the course of the night are these yields coming down? Or even better, maybe it's just better to watch it in the early morning. Are the yields coming down? If the yields are coming down, it can match a theory that we've made a temporary bottom on the S&P 500, on the NASDAQ, on anything really, except for maybe the auto manufacturers. And then you can feel confident about, hey, maybe going back to the S&P 500, like where do we go from here? Like what's our retracement look like? Do we, fill a gap over here? That would be a 3.45% move. We saw that last year. We did a 6% move in recovery. Maybe we don't need to do a 6% move. That 4% altogether will let you close the gap, and maybe you can sell off into right here, maybe like 412 into October, perhaps. So what you want to do is, if you get a nice move to the upside, you want to start taking your some of your cards off the table and get lighter as you go up. Because what are we? We're already long. Like if you have a trade out there and you want to, you're long. Like if you're long S&P options, or if you're long Tesla options, as we start going up, you want to start taking cards off the table. If we're up 2%, I know that doesn't sound like a lot, but it's a lot for the S&P 500. And for Tesla, 2% is nothing, obviously. What I did with Tesla, so we talked about yesterday how I entered longs going into the end of next week for potential hedges to the upside for any covered calls that I want to sell. And I still have those. But what I did is they were actually expiring. Actually, some of them were expiring this Friday. I just moved them to next Friday. That will allow me to sell calls going to the maybe towards the end of October. That would kind of balance out if there's really violent price action upwards that I can get out of the calls sold by closing out the calls bought because they're shorter in time frame. So we talked about that. So that's working out for us well. So it did overshoot. Just be really aware of kind of two levels going into tomorrow. If we're bulling tomorrow, there's no guarantee that we're going to bull. Maybe we just sell off completely and this is all fake, whatever. But if we bull a little bit tomorrow, just watch 260, 250, which is ironically a strike for options and also the bottom, the closure of the gap that we had from the 21st of September. Recognize that the way we calculate EM, 265 could be that upper level of what's realistic for a 1 week move on Tesla. Can it break above that? Sure. Are we going to get any Cybertruck news? Maybe. I made another video if you guys want to watch that with some information that I gleaned from x.com. And as well, Whole Mars blog mentioned that, maybe we don't get a Cybertruck event date until in the, early part of November. But the announcement of that date could be anywhere from now until into the middle of October, just to give enough people time, give people enough time to make arrangements, flights and hotels, etc. So looking decent on Tesla, but this is a very strong move to the upside. And like I said, as we start getting to these levels, if we get there, maybe kind of revise your idea of what you want to carry into the beginning of next week. As far as trades go, if you want to hedge, you can use those opportunities of any bullishness in the morning to take a quick hedge. What do we say all the time? When you see a move in the morning, it's reversed really quickly. It can be really quick. So you have minutes, and we have really good examples of that where you have a nice pump and it's faded within minutes. This is on the minute time frame still. So gap up in the morning, sells off, right? Like this is gap up, sells off completely, or gaps down, bounces up. So these moves are really quick. And if you want to try to get a hedge in, like let's say you're going to work and you only have a couple of minutes in the morning, that's all you really have to do is just watch a couple of minutes in the morning sometimes. And you can probably get a good entry if things are a little bit overly bullish or if they're overly sold. You can at least get into positions that are maybe a couple days, maybe 1 or 2 weeks out. You have to use those opportunities very, very quickly in the morning to do so. And you can even look at it for like a continuation of a momentum move. So you had maybe 5, 6, 7, 8 minutes before it reaches this 253 number, and it bounces around here and going along there in the morning. You can go along and be comfortable going along, and then you're at work and you're fine. Everything's hunky dory, right? But you kind of have to read the room about, is it the part where it's going up really sustainable? Because if you look at the S&P 500, it did not have similar action to Tesla, where S&P kind of had a slight gap up, sold off, went back up, sold off, went back up, sold off, went back up, and did that last move, which was similar to what Tesla was doing, but Tesla was not selling off during the course of the day. It was just up, slight profit take here at 1 o'clock, and then just zooms up to close at 261, which is really, really good because it's above a level, of a psychological level or an option strike level of 260. I really like that move a lot. And you can just look at, other strong names where Tesla is kind of diverging from what you could say at during May of this year that, okay, Tesla is being considered an AI name. That's why it's going up. But let's look at the AI name. Let's look at NVIDIA. NVIDIA had, not a great day for what you might think would be a bounce in the stock market of 1.2%. NVIDIA should be moving like 3 or 4% or 5% or 6% like Tesla. But then you can see how this is not an AI move, right? This whole AI thing, maybe that's kind of like maybe not the play right now. Maybe the play right now is, overly sold names. Maybe the play right now is getting out of Ford, GM, and Stellantis and stuff like that. And Tesla can benefit from the latter. The longer the strike goes out, and the more and more there, we saw the EV sales for Ford and GM. Not too great, honestly. I mean, not too great for the amount of investment, the amount of bluster they've been talking about, how they would be outselling Tesla in a year. Not too great. I think I want to say the Ford Lightning sales are kind of flat year over year, or even worse year over year. In GM, I think their Bolt is their number one seller, and we know that's going to be discontinued at the end of the year. I mean, at the end of this quarter, they're not going to be making. They're going to revise it to be an Ultium based car. So if their number one EV car that's pushing their EV volume numbers high is going to be discontinued, and who knows how long that's, look, they haven't even come out with the Equinox yet, right? That's supposed to be their answer to the Model Y. Who knows what's going to happen? But for now, the strikes are really hurting them. We know GM took out a loan facility of, a revolving line of credit that was $6 billion, I think, with JP Morgan, because the strike is really going to start eating into their cash, perhaps, because they don't know how long it's going to go on. And from what the UAW says, is it really going to be a long drawn out fight? Who knows? Now let's look at the news real quick before we end the video. The news is going to be, well, the only thing that really matters, I guess, is going to be the ADP payroll report, which came in very weak, which kind of maybe the market was unsure. And the reason why the market was unsure, you would think that if jobs are much lower than what people thought they would be, then the market would zoom up, thinking that the Fed will ultimately cut rates sooner rather than later. So in the key points from the CNBC article, it says ADP reported that private job growth totaled just 89,000, down from the upwardly revised 180,000 and below the 160,000 job estimate. So they estimated 160 for the month. It was half of that basically. And August was stronger than they thought. It was revised to 180, and it was basically cut by 100,000 going into this month. And there is kind of caveat. The reason why the market wasn't so sure about this in the morning, it's like, for example, if non-farm payroll comes out this week and it's down by 50% from expectations, you would know the market's going to go up pretty violently, because that's kind of like a telltale sign that the Fed needs to act sooner rather than later. But ADP is not necessarily that same thing, because what? It says here in a highlighted area, ADP numbers can differ significantly from the government's official account, which comes out Friday. Economists estimate non-farm payrolls to increase by 170,000, down from the 187,000 rise in August. We are seeing a steepening in decline in jobs growth, says Neil Richardson of ADP. Additionally, we are seeing steady decline wages in the past 12 months. The market didn't buy it. It didn't. Maybe it bought it at the end of the day because it wanted to bounce, but it wasn't running off this. It was pretty much running off, okay, yields are coming down, and we'll look at that in a second. So we should look up, maybe we should look up Rivian. So Rivian had a bad after hours performance. So we'll switch back to the charts, and let's just pull up a Rivian chart. We'll take it off the Ford chart, and let's see what we got for Rivian. So now you see this blue line. You can see it closed at $23.70, and after hours, it's $21.99. That is a drop of, what is that? 7% after hours. And here's the after hours pricing. And you can see on the 15-minute, it just nosedived. And what happened here was Rivian, just like GM, is needing money. And they're going to raise $1.5 billion by issuing more shares, I believe. So, yeah, I mean, their cash burn, we talked about this before. The cash burn on Rivian is insane. I mean, they're going through money like crazy. And I'm not really sure what they're doing with it, because it's not like they revise upward their production number. You would think that, if with all that money, they want to scale their product. But all we know is that they're just burning money, not scaling the product. They're still going to do the same numbers they've been forecasting for months. And, we all like Rivian. Rivian's a fine company. It's just that, when it comes to making money, RJ, the CEO of Rivian, was just on CNBC before the market opened, I believe, talking about how they had this vision, this stair-step process to becoming profitable. And they go ahead and just dilute their share count. I don't know. But maybe Tesla was kind of affected by this, because it was in the after hours pricing for Tesla. What is it looking at right now? I mean, it's down like $1. I mean, that's not really that bad. $1 for Tesla is like, what, 0.3%? Yeah, it's like 0.3%. So it's not that big of a deal. But what it kind of does show is that there could be the movement in the automakers going down and Tesla going up could be because, a new model's coming. We have Cybertruck coming out. Maybe that puts pressure on Lightning sales. So we know Silverado only had 18 sales for the quarter, but I do understand as well that it just started selling, a month and a half ago, but still, who cares? Anyways, the Cybertruck can really eat into Rivian sales too, though. right? And Rivian's not making any money. So if for every sale that Cybertruck will eventually take from someone who's wanting to buy a Rivian, that hurts Rivian. We also know that Rivian's trucks are not going to be in. I don't know this for a fact, but I could see a Cybertruck being a work truck, but you can't see a Rivian truck being a work truck. I don't care what anyone says. The truck's too small. It looks like a toy. It's not it's not resonating with the same type of crowd. I can see Rivians going off into the desert, having nice campouts with that type of crowd. But going to the work site, I can see 1 year from now. You can't tell me you couldn't envision a whole line of Cybertrucks at a construction site, kind of beat up, maybe dinged up a little bit if you can ding up the stainless steel, dirty, covered with mud, bugs all over or whatever, because it could be a work truck. It can do it, and it can look the part, and that's what's really important too, because if you can capture the work truck crowd, we're talking not just taking customers away from GM, Stellantis, and Ford, but really understanding how in one day, is this going to be a mass market vehicle to the point where it becomes a fleet vehicle? Like it can when you're going around your city or your municipality of some sort, and you see like a city truck that is fixing the street lamp, or a city truck that's visiting the water treatment plant. But imagine all those trucks being baseline model Cybertrucks. Can we get to a pricing point where we're talking like $40,000 that all these trucks that you see, all the white trucks that are working for utilities and what have you, can be replaced with Cybertrucks? I think that's possible. And eating to this fleet sales, because we know, what did Ford say? Jim Farley said, our pro line, that's what's really making us money. Can we eat into the professional market as well? That's what would really make a difference. And I'm not wanting companies to go bankrupt. I'm just wanting our company to succeed. That's all I'm saying, right? Anyways, so for tomorrow, like I said, it's going to be really tight, because going up to close the gap is only 0.5%, and going up to 265 is only 1.4%. That's nothing for Tesla, right? There's nothing for Tesla. So what are your upside moves? Getting to the point where this level was pretty important. It's somewhere in this 273 area to 275 area on the extreme upside. On the downside, what we don't want to do is we don't want to make a new low, right? So if I was to extrapolate this triangle's bottom line, it sounds crazy, but staying above this line would essentially still be bullish, even though that can be a pretty dramatic move. You can draw another trend line like this, where you kind of don't want to see Tesla get below these trend lines. And let me do a percentage thing so it'll be easy for you to remember. Now, if you're down 4%, ironically, it sounds terrible, but if you can maintain that trend line, that's not bad, right? It's not necessarily bad. If you're in an option though, you're fucked, because you're going to be sparring the next day. But maybe some news comes out tonight that can help us all out. But okay, so let's draw it out. So we want to kind of stay, if we're going to sell off, it might be a gap down, and then you kind of get to 256, kind of move up a little bit, bounce up. And if you want to keep selling off, you just kind of just nosedive into this area like that, right? And we'll just draw that as red to not confuse ourselves. But if we were to go up, I would love to see, if we're going up, it's because maybe jobless numbers are really bad or good. I don't know. Look, we don't know how they're going to interpret that kind of stuff. But if some reason we're gapping up, I would say there's like on an economic kind of data kind of thing, you can gap up maybe 0.5%, 1%. Let's say you're over here and man, this is hard to say. Maybe you're over here. Let's say if you're gapping up, you go over here, you hit resistance, and you kind of go up like that. But if there's the other type of gap up, and look, I don't think it's going to happen tonight, but if they were to release Cybertruck details tonight, I don't know why they would have done it already, I assume, right? But the gap up would be more severe. It would be above the EM, and it would be something like that. But otherwise, we could be flat, but I never draw flat. I don't, because it doesn't really work out most of the time if I do that. Tesla's more violent than that. But, we got the kind of general gist of it. You kind of have this, it goes up to a level, resistance, breaks through resistance quickly, scoops down, and then I didn't catch the move up. But the general direction is, when you see movement like that, you can see things are kind of bullish. And when you see sell off, it just sells, right? Like if it sells in the middle of the day, it's going to be some type of news that we're not familiar with, or just the whole market is selling off. But yeah, okay. Thanks so much, guys. Wish us luck tomorrow, and hopefully we can continue the move. But we already had a nice move already for the week, to be honest. But if we get more, I'd love to see it. All right, guys. Have a good night.